Hello and welcome back. This is David from the Personal Finance Squad. Okay, now we're into section 11.4 for the 401k, where you make investment selections. When you contribute to your 401k, you will have an account that you go to, and it will allow you to input money into all the investment selections that you choose. Usually there's a good 20 or 30, depending on the plan. Some might have 10, some might have 40, but either way, there's usually a good amount of selections of investments that you can put your money into. Now, they're all going to be contained with mutual funds in most cases. Sometimes there's a company stock plan where you can put money in a stock plan's fund, or a stock plan itself, meaning it's actual shares of the company's stock. In addition, with these investments, they usually give you a pretty good selection of the types of investments. So you'll have some conservative choices, you'll have some aggressive choices, you'll have some domestic, some international, bond funds which are considered to be conservative, and you can also leave your money into cash. It'll be some kind of money market fund as a title within that. So when it comes to investing, a good idea is to have your money in about 10 or more selections. Now, this doesn't mean in your 401k you have to necessarily do that, especially when you don't have a lot of money in there. But on the whole, if you have a portfolio of your own money outside of your 401k, on the whole, what you want to do is get that amount of selections, because that allows you to diversify. And if you've seen the other videos, we've mentioned diversification more than once. It's very important to spread your money out, so while some are doing good, some are doing bad, you can kind of stay in the middle. It's somewhat a loose interpretation like dollar cost averaging. But either way, you do not want to invest all your money into one fund, especially when it comes to your company's stock. On the whole, most of the investment selections you're going to have are mutual funds, and that's what we're going to talk about in this section of the chapter. And so we want to see what a mutual fund really is. So we have a definition here. It's an investment company that sells and buys existing shares back at the request of shareholders, which is you and everyone else who puts money into a mutual fund, and uses its capital to invest in diversified securities of other companies. So what they're doing in most cases is buying stock. And also understand that when you're investing in a mutual fund, it's not just the mutual fund from the people in your company, it's a mutual fund that's open to the public. So there could be thousands of people putting money in here, and this mutual fund makes decisions with their fund managers to choose the investments that they think are going to perform well. Now, mutual funds have their own categories, meaning the types of funds you're investing in. So if you're international funds, you're going with international companies. If you're domestic, it's domestic companies. Some might invest just in the S&P 500. There's all sorts of categories, and there's well over 5,000 mutual funds that money can go into. So when it comes to your 401k, you're going to have to stick with the selections that they give to you. And we will get into mutual funds in other videos in a deeper explanation. We just want you to understand here where your money's going to go on the basis of your 401k. Another piece of information here is it's transparent, and what it means for a mutual fund to be transparent is it behaves like a stock. It's a one price number. So even though the mutual fund has several stocks in it and securities, the price is just a one number to you. It acts like as if it was a stock. And it only changes in price once a day. So really all the transactions within all the holdings that they have get all calculated, and that's why you see the change once a day. Okay, so now let's go down here and let's talk about the investor type. We've talked about the types of funds briefly, like meaning there could again be an international or domestic or an aggressive fund. So what you need to figure out, especially if you're new to the game, is what kind of investor am I? What type of investing do I like to do? Now, generally speaking, if you're young, the notion is to invest in mutual funds or investments that are a little more risky. Aggressive would be a term you'd hear, because they have the potential to make more money. Now, yes, that means they also have the potential to go up and down. So they really be ones that go up really high in price and have big fluctuations in price, meaning they could shoot down and they can shoot back up again. So they can be very erratic at times. Now, that doesn't mean you have to invest that way. That's just a notion that most investing people will tell you to do, most financial folks. And the older you get, you tend to get more conservative because you've built your nest egg and you want to protect it. And the other piece, maybe if you are in the middle, you might have a mix between some high risk and conservative as you lean in toward the more golden years of your life to be more conservative. So there's kind of three tiers there, but this is just a general overview, and we'll look at this a little deeper down the road. Now, investment performance indicators. When you go into your mutual fund selections, you will be able to look at all of them and see their performance, their histories. And certainly statistics don't lie, so it's very nice to look at numbers because it allows you to get a good picture of what you're going to put your money into. So we can see in this table below kind of layout that you would see for your investment choices. So you can see right here we have some indicators of the beyond the name. Usually you're going to see things in patterns like this. So this is your 3-month or your quarter of performance of the recent quarter, and then year to date. So this could be the 5th month, and maybe you haven't hit the 2nd quarter yet, or maybe you're in the 9th month. It just depends from January 1st to the point of the date and time that you look at it. And then certainly you can see the investment over 1 year's time, 3-year, 5-year, and 10-year. Now, you can see what you want to look for is consistency. What's going to make you the most money? Like anything, very logical. But you can see right here that you can see a fund that this one doesn't have a 10-year history in this S&P XYZ fund. So, but they have had 5 years, right? And you can see that they've been up and down here a little bit, pretty consistent on the whole. And then you can see that from their inception, they're at 7.73. Now you can see this dividend growth, and look, they had some really nice years right here, right? Now, like dividend growth, for example, it's had a really nice run for 3 months. Year to date's 20.4, 1 year is 20.4, and then over the 3-year and 5-year and 10-year history, the number is really low. So it shows you they had a really bad stretch of time as a whole before they got into this year here. So is it a flash in the pan? Have they figured some things out? Who knows? But again, you need longevity to give you some good feedback on what you want to do with your money. And we can see XYZ domestic. And now we can see right here that 3 month is 2.31, and then we see year to date's pretty strong. Then we can look right here. We see a nice pattern here. And so you can see that from its inception, they're at 8.90. And dividend growth is 8.64, right? But here's the kicker. You can see that over a 10-year period, 8.90 is higher than anything. And now dividend growth here is 8.64, and they've had 10 years of history. But what you don't see in this chart is how long the fund's been in existence. So if you don't see it in your 401k, you can certainly go on the internet and look, and it'll tell you the date of the fund. When did the fund start? So for example, this one hasn't, we know that this one here is less than 10 years old, right? We know that this one is at least greater and equal to the 10 years, right? Now, let's just say this one is back in 2006. And then this one here we know is also greater or equal to 10. Let's just say that they started in 1978. So a really nice indicator for consistency is that while this one's making 8.9 and this one's making 8.64, this one here, this domestic growth has been doing it for a long time. And that's a great way to say, listen, I feel really good, really safe with my money. This is probably a really wise choice because I know that they've had the longevity. That means there's been many people, many fund managers changing hands, managing all of these dollars for everybody, and they're still doing it over time. Trust me, if you get a fund that makes 8.9% over that many years, there are some out there, that is certainly a great way to make money because on the whole, people don't make 8.9% of their money consistently year over year. So again, this is just an example, but this is the kind of thing to start with here to get an idea of where do you want to put your money. And certainly, again, history and longevity and strong results are a great way to feel a little more comfortable when you're choosing your money. And also, when you're a little new to the game, it can be a little exciting and because you're not used to giving your money away to put it somewhere else for someone else to take care of it. So it's something you'll have to get used to, but making wise investment choices will make you feel better on a day-to-day basis. You can also see here that mutual funds will tell you what they're trying to do with the money, like what is their strategy. You can see long-term history, we just talked about that. And you'll always see little disclaimers. They'll say, hey, this is what we're doing, but performance of late does not mean it will guarantee future results, right? Good or bad. So again, this is just little pieces of information. You'll be able to read about the performance of the funds in terms of where they're putting the money. A lot of times you'll see their top 10 stocks. You can see if they're investing in companies such as Apple or pharmaceutical companies or whatever it may be. They might have a percentage in bonds, some in cash, some in stocks. You can see all of this. It's open to the public. And as you get more and more used to reading these things, this will give you a good handle on what you're trying to do here. So do your best to work with your mutual fund and what they offer and provide in terms of the choices because you are limited, and try to spread that money out as you make your selections. Okay, that's going to do it for this section, and we're going to get into 11.5 in the next section where we talk about mutual fund investment and percentages and transfers, and certainly talking about, again, that diversification principle. Okay, so thanks for joining, and we will see you there.